with an MBA from the University of Lagos, an MSc Accounting and Finance from Robert Gordon University in Aberdeen, UK. Dr. Olowo served as the 22nd Commissioner for Finance in Lagos State between the years of 2019 to 2023, where he successfully managed the fiscal policy strategy of the fifth largest economy in Africa during one of the most challenging periods in the world history. Before entering mainstream public sector, Dr. Olowo has been an experienced chief finance and audit executive across industries. He is a professor of practice in forensic accounting, development finance, and public policy at the Africa Academy for Counter-Fraud and Anti-Corruption Studies. He is an executive in residence at Lagos State University and James Hope University Business School. He currently serves as the Executive Secretary and Chief Executive Officer of the Financial Reporting Council of Nigeria, where he leads efforts to enhance financial reporting and corporate governance standards in the country. Additionally, he is the chair of the 41st session of the United Nations Conference on Trade and Development Intergovernmental Working Group of experts on international standards of accounting and reporting, reinforcing his influence in global finance reporting and regulatory frameworks. Thank you. So my name is Tomiloba Babaramide. I work in the Legal, Regulatory and Taxation Department here at NECA, and I will be your moderator for today's session. So as we progress, I would like to yield the floor to the Director General of the Nigerian Employers Consultative Association, Mr. Adewale Smart Oyorinde, for his opening remarks. Digisa, you have the floor.
Thank you. Good morning, colleagues, and good morning, Dr. Rabi Oluo here represented. We want to especially thank you for the opportunity to engage in this very important, very important session. While we appreciate the time that is being committed to this, we also want to appreciate Mr. President, President Bola Ahmed Tinubu, for the mandate to ministries, departments, and agencies that they must consistently on a quarterly basis engage citizens and stakeholders on a quarterly basis. I think this mandate was sent out last week through the Central Delivery Coordinating Unit under the Office of the Special Advisor to the President on Policy and Coordination. So for us and for the ministry, for the department and agencies, engagement has become institutional now, and for us, being the biggest private sector platform in Nigeria, probably in Africa, I think they need to continuously engage and continuously share knowledge on new reforms, on new practices, on expectation of government from the private sector, and expectation of the private sector from government has become very, very important. So this forum or this session is also very, very important. Also in view of many other issues that are currently ongoing. The tax reform is ongoing, there are reforms in the Ministry of Interior, there are reforms in the Ministry of Industry and Investment, there are reforms everywhere. And those reforms, we believe strongly that they are not ends on their own. They are not to achieve an end on their own. They are means to an end. And the critical stakeholder that will facilitate the successful implementation of those reforms, the private sector, we believe strongly also needs to be carried along in the context of what is expected, in the context of what will be, what should not be. And the feedback, as one of our very referred ministers have said, the feedback from the private sector in the context of all these reforms, policies and programs of government is very critical within the context of how successful those policies will be, how successful those reforms will be, and how successful those laws will be in the context of legislation. So this engagement, quite important, quite fundamental to us. I will believe it's going to be very fundamental to the FRC and also in the context of harvesting necessary feedback that will necessitate the easy implementation of the programs and policies of the FRCN. So once again, we want to thank all colleagues that have joined the call. We are getting very close to 100. We are expecting over 200 persons joining this call, and also to Dr. Rabiu Oluwo for your support thus far. We work closely with you while we're as the Commissioner of Finance in Lagos State. We remember the era of the land use charge and the many challenges that came with the land use charge, and your support, and then with His Excellency, the then Governor of Lagos State. I think our partnership and our collaboration resolved the issues of the land use charge and created the foundation for what we currently enjoy in Lagos State within the context of the land use charge administration. And we believe strongly that that can also be replicated at the Financial Reporting Council of Nigeria, not only for the good of the private sector, but for the good of the country as a whole. So once again, thank you very much. We are looking forward to a very incisive, a very engaging, and a very definitive session. Thank you, Tomi. I hand over back to you.
All right, thank you. Thank you very much, TJ. So next in line, we are going to be progressing to the knowledge session, the knowledge sharing session proper, and I'll be inviting Mr. Titus Osawe, the Coordinating Director, Inspections and Monitoring and Corporate Governance Directorate, Financial Reporting Council of Nigeria. Mr. Osawe, you have the floor, sir. Thank you.
Thank you very much, moderator. The DG, NECA, and the other persons who are in attendance at this virtual meeting. I want to say a very good morning to all of us. On behalf of the Executive Secretary, Chief Executive, Dr. Rabiu Oluwo, who is unavoidably absent. In fact, you realize that we had to get back to you a couple of minutes ago, just when we were a bit now certain that it would be impossible for him to physically be in, to personally be in this meeting. And he has asked that I represent him. I've listened to what the DG had said, and for us at the Financial Reporting Council, speaking now on behalf of the Executive Secretary, engagement is one of the strong points, a strong area that we have deemed it necessary to kind of emphasize, especially in the era of our Executive Secretary, Chief Executive, Dr. Rabiu Oluwo. So for us, having this engagement with NECA is key. And we believe that at the end of this exercise, much as this would not be the end, a whole lot of things would have been cemented. And of course, future engagement will always produce the desired result. I would like to quickly go to the presentation, just a few information that Dr. Rabiu Oluwo had asked me to present on his behalf. And of course, await the question and answer session. Now, we've been asked to talk on the financial reporting responsibility, what corporate Nigeria should know about recent developments in the Financial Reporting Council of Nigeria. Of course, that means we first of all need to say something about who we are. Financial Reporting Council, as we all know, is a federal government regulatory agency established by an act, which has of course been amended. Specifically, we regulate the corporate reporting space. And when I'm saying corporate reporting, I'm saying financial reporting, corporate governance, and sustainability as the areas of focus. Of course, in the Act as amended, certain sections are key that speaks to the various things that we'll talk about. Of course, Section 7 of the Act talks about the powers of the Financial Reporting Council. Section 8, the functions of the council. And Section 11 talks about the objects of the council. So if you put all of them together, it's, they all speak to what we will summarize as the mandate of Financial Reporting Council of Nigeria. So that's who we are. And I'm sure, like you also know, we are under the regulatory oversight of the Ministry of Industry, Trade and Investment. In recent times, the Financial Reporting Council has been undergoing what you could call some vital, very key developmental phases. And to drive home the development that is going on in Financial Reporting Council, we now have what I would call a mantra with the acronym DOSE, D-O-S-E. And what does this represent to us as Financial Reporting Council? D is for digitization, D in the DOSE. O is operational excellence. S is stakeholder engagement, which of course is one of the things we are doing right now. And I dare say it has become, maybe I'll use the word, a habit for us as a Financial Reporting Council to do a whole lot of engagement, because we believe if you collaborate, if you engage with stakeholders, of course, it makes the oversight function, the responsibility placed on us, a lot easier. And then E in the DOSE is enforcement. Along those lines, a whole lot of changes has been taking place at the Financial Reporting Council, which we believe the corporate Nigeria needs to know about. And so very quickly, let me now kind of narrow it to what I would call what corporate Nigeria needs to know concerning the various activities of the Financial Reporting Council and ongoing developments. We had an act, FROC Act of 2011, but of course, with time, an amendment to that act happened, and that took place May 3rd, effectively May 3rd, 2023. And with the amendment came a few things that changed. Another thing we believe we should know concerning the change which the amendment brought about was what we will call a streamlining of the composition of our board. It used to be slightly heavy in terms of number, but to avoid a situation where we'll be dealing with conflict of interest and related matters, the amendment now took into consideration those that were previously on our board who perhaps because we also exercise oversight function on them, they needed to, be moved. So there was a streamlining of the composition of the governing board of the Financial Reporting Council to avoid and, in fact, eliminate this issue around conflict of interest. Of course, another major thing that the amendment, brought about was something that had to do with, maybe over time we're going to discuss more about that, a widening, so to speak, of the coverage of public interest entity. The previous act, the 2011 Act, had a definition for public interest entity, which perhaps was not so clear. But by the amendment in the amended Act, the public interest entity definition, came in by way of, stretching it with what you can call maybe examples, coverage in terms of entities, in terms of sector that now came into the coverage of, a public interest entity. For instance, the PIE definition now means that public interest entity means governments and government organizations, listed entities on any recognized exchange in Nigeria, non-listed entities that are regulated, public limited companies, private companies that are holding companies of public or regulated entities, concession entities, privatized entities in which government retains an interest, entities engaged by any tier of government in public works with annual contract sum of 1 billion and above. Any tiers of government, meaning federal, state, and of course the local government. That now came in under, that now became PIE by the amended act. Licensees of government, all other entities with annual turnover in excess of 30 billion. By the coverage, all of those entities that fall within these, what I would call descriptive meaning of public interest entities, now fell under the coverage of the oversight of Financial Reporting Council. Now, in the new act, over time, the submission of financial statement, which is key, because when you are talking of regulating financial reporting, then of course we must deal with the accounting bit of it. When we say financial reporting, by the way, we are talking of accounting, auditing, valuation, actuarial related issues, and of course, the corporate governance and sustainability side is like the second major leg of the Financial Reporting Council's mandate. And so for the accounting, the easiest way, the document that becomes relevant is the financial statement. So prior to the amended act, we receive financial statements, hard copy financial statements. So you can imagine the challenge we would have faced. But in the amended act, the provision was now put there for the Financial Reporting Council to receive financial statements digitally. And that is what we have come up with in recent times. I'm sure we must have seen publication, public notices and all that, which we call National Repository. So a dedicated portal has been developed for that purpose. So going forward from this year, we expect that all financial statements that will be submitted to the Financial Reporting Council will be done electronically. That is actually from the amendment that the Act came up with. Another very major aspect, we'll just highlight a few of the areas that perhaps the amendment, highlighted, which we believe for this gathering we need to know. By Section 41 of the amended Act, it stated that a person shall not hold any appointment or offer any service for remuneration as a professional for public interest entity unless he is registered under the Act. That means, especially for those who are rendering professional services that can be described or that can be linked to financial reporting, it's essential that they get registered with the Financial Reporting Council. Remember, what we are talking about is what corporate Nigeria should know, and I think NECA sits heavily on the corporate Nigeria space. Now, also linked with that is the issue of renewal of that registration. By the initial Act, a 2-year cycle was embedded in the Act for the renewal of the registration of such professionals. But it was felt that 2 years, a situation where every 2 years you now need to almost like go through the registration process again, was a bit cumbersome. So in the amendment, what now accounts for renewal was just your regular payment of your annual due. And that annual cycle now became the renewal. And so for those of us who perhaps have interacted with FROC in recent times, you see that when your certificate is out and which you can do by yourself now, there is that issue of an expiry date being affixed, on a yearly basis. Of course, another key area which I had mentioned as one of the components of our mantra is the issue of enforcement. The current Act, that the amended Act, also help to strengthen the enforcement arm of the Financial Reporting Council. But that is not a focus for FROC. It's more like we can't do away with it, but we are not emphasizing it as an area that we will hit on. But you know, for any of such acts and any of such laws that are out, the issue of enforcement ordinarily must be taken very seriously. And then, of course, the area of concern again has to do with Section 33, which speaks clearly to the issue of annual dues and related matters. According to Section 33 of the amended Act, registered professionals, registered firms of professional outfits, the public interest entity as organization and other entities as may be prescribed by council under, with the approval of the minister, are expected to pay annual dues to the council in line with the specifications of that Section 33. So the amendment to the Act highlighted all of these issues that I have so far mentioned. And we thought it would be nice at this meeting to perhaps bring that out. And of course, in the discussion that will follow, we know how to attend to issues around it. But Financial Reporting Council has been doing a lot, which we are not sure, perhaps we are not so sure if all of us are aware of some of this. So we want to just, quickly reel out, I use the word reel them out, what we have tagged some of the operational areas which we see as milestone, achievements really. So that at least corporate Nigeria will know that we've been a bit busy over the last couple of years. The very first amongst this speaks to the workings of Financial Reporting Council. In the Act, we are expected to function, to work with 7 directorates. 7 directorates, namely Directorate of Accounting Standard Private Sector, Directorate of Accounting Standard Public Sector, Auditing Practices Directorate, Corporate Governance Directorate, Inspections and Monitoring. I deliberately mentioned those 5 because those ones have been what I would call the ones that have been functioning right from the inception of the Financial Reporting Council Act of 2011. Those 5 that I have mentioned, they've been functioning. But somehow, because of the specialty of the other 2, because we have 7 directorates as per the Act, both the 2011 and the amended, we have 7 functioning directorates by the Act. The first 5 I mentioned, started off right away. But 2 directorates were not in operation until the year 2024. And so the first thing that we would say we were able to achieve within this space of time is the operationalization of what I would call the 7 directorates by coming on board of the last 2, Directorate of Valuation Standard and Directorate of Actuarial Standard. So as we are now at the Financial Reporting Council, the 7 directorates provided for in the Act are functioning. They are functioning. Closely related to that, because we now have 2 directorates that came on board recently, we needed to also, for those of us that are following what we are doing, in the space of accounting, in the space of auditing, and I dare say corporate governance, we already have what we will call standards. We already have regulations that are driving those areas of financial reporting and corporate governance. Of course, we know whether we are talking public sector, private sector. For private sector, we have the IFRS. For public sector, we have the IPSAS. And then for the auditing standard, auditing practice standard directorate. We have also deferred to international standards on auditing. For corporate governance, we have our own NCCG 2018, which we must also commend corporate Nigeria for aligning with the provisions of the NCCG 2018 very well. With the feedback we get, we are encouraged by it as a council. But then for the two that just came on board, it became necessary to also go to toe the line of having standards. So the Valuation Directorate and the Actuarial Directorate, we are now in the process of coming up with standards. Of course, they will eventually come out as regulations for the Valuation Directorate and then the Actuarial Directorate. So in essence, all of our directorate, we have a document that we use as a basis for enforcing compliance and of course driving compliance. So the two directorates, valuation and the actuarial, currently the document that is being put together to become a regulation for their use, they have both reached the exposure stages where we normally would get feedbacks, get comments from stakeholders. And I believe in this instance, as much as possible, the NECA will be contacted when we need all of the information around stakeholder comments. As much as possible, we'll contact NECA. So that's another area that we have tried as much as possible to work on, development of standards for the two new directorates. Financial Reporting Council has also, I had mentioned the issue of the National Repository. We issued public notices telling corporate Nigeria that going forward, financial statements should be submitted digitally through the portal. It's been activated, and we are hoping that from now, especially those members of NECA, we expect to get our financial statement through the National Repository. Financial Reporting Council also issues a lot of rules. In recent times, we had, when we started, before 2023, we had about 10, but between 2023 and now, we've added 4 more, or 3 more, yeah, 4 more. Rule 11, Rule 12, which deals with transparency reporting for audit firms. Rule 13, dealing with submission of financial statement by non-resident companies. Rule 14, which is like the latest amongst them. And then there are other documents that have also come up. I mentioned Rule 13, I said submission of financial statement by non-resident companies. This aligns with what came up in the Finance Act, I think 2022 or 2023 Finance Act, that dealt with non-resident entities that earn income in Nigeria. Of course, the only way to determine what they will be paying, whether for tax purposes or the like, would be that a financial statement had to be prepared. And so Financial Reporting Council had to come up with a rule so that they will know exactly what they should do, because they are not strictly Nigerian companies, but they earn income from their operations in Nigeria, for which we are saying they need to prepare financial statement to take care of that specific aspect of their overall income, the one that is ascribed to their Nigerian operations. So we have a rule wrapped around that. And then, of course, like I said, the Rule 14, which is the most recent. I know there may be some issues around what is Rule 14 supposed to achieve. The summary of it all is, maybe I can say this right away. For Rule 14, yes, the pressure is on everybody this year, being the first year of its operation. But eventually, we'll discover that when Rule 14 is now entrenched generally, it will support what we don't want to be, doing anymore, meaning sanctioning entities for what we will call regulatory infractions. Because Rule 14 is just saying what level of compliance has any entity, reached. Of course, we put the responsibility on the auditors, but at the end of the day, you discover that very minor things that one can be sanctioned for instance, issues around timelines, issues around certifications. The moment the auditor gets a clearance or the entity gets a clearance through the auditor from FROC, you realize that that area of regulatory sanction, which some of our entities here, some of the entities here might have been sanctioned over the years for a thing that perhaps they are very simple as not submitting your financial statement in time, in line with the timeline, not certifying the financial statement, no registration of principal officers. By the time we apply Rule 14 very well, it's discovered that that bit of sanctioning somehow would have been dealt with to the benefit of the entities. So the issuance of rules is something that will be ongoing as we, discover areas of interest that we need to plug in something into. Financial Reporting Council will certainly do that. Of course, another document that is out there, which a lot of us are grappling with, whether we are listed or not, is the issue of internal control over financial reporting. I want to believe over time, everybody will get used to that. I'm sure we will not argue on the issue of how important it is for entities to have their internal control intact as far as the organization is concerned. All of this, as they speak to the sustainability of that particular entity. Also, whenever there are issues at the at the international space that would one way or the other have impact on Nigeria, FROC speaks up. And the clear evidence of that was the issue of IAS 29, when at some point Nigeria was almost being declared a hyperinflationary economy. Financial Reporting Council had to come up with a public, a press release, adducing reasons why we believe we are not yet a hyperinflationary economy. I think that press release came out about between January 22nd, January 24th in many of our newspapers, Business Day, This Day, and the like. We made that press release, and I believe that somehow must have calmed the tension because we were, of course, monitoring what was happening globally. Nigeria was almost being declared a hyperinflationary economy. So with that press release that came from the Financial Reporting Council, that matter, let me use the word, has been put to rest, and we are watching to ensure that we do not get into that challenge again. While all of this is going on, we also have started audit quality review. In time past, we seem to have focused on the entities. And that is why, of course, NECA was always engaging us. The NECA has been engaging us for as long as I can remember, because the focus then was on the entities. But in recent times, we have actually started audit quality for the audit firms. And so we have started visiting the audit firms to check the processes that the auditors use in auditing the clients, so to speak. And so that has made our auditing practice directorate very active. We have interacted with the Big Four, the next level, and it's an ongoing process because that is one of our areas of concentration now, to see how the auditors, the audit firms carry out their audit, whether it's in line with, of course, international best practices, and of course our audit regulation, which has since been released. So that visit of audit firms has started, and of course, like I said, it will continue. It will continue. Unlike when we invite entities to our office as part of inspection, that of the audit firms, the audit quality review that we're talking about is actually on site. We go to the audit firms to carry out that particular assignment. We also intend over time to go into the area of on-site inspections for the entities. That will follow in due time. But the one that is heavy on ground now is the one that has to do with the entity, with the audit practice. So visit to audit firms has commenced, and we intend hanging on and pushing it as much as possible. Of course, to ensure that in the area of operational excellence, remember I said we'll be attending to our DOs one after the other. The first bit of it is many of our things are now digitally driven. For operational excellence, we have embarked on a capacity building for ourselves as FROC, because when we are pushing all of these things, we need to be properly equipped. So capacity building activity of FROC has been intensified within the last, I would say, 15 months, and it is continuing at a very, very high level. Now, as I begin to perhaps wrap up this, what are the ongoing projects that we also believe corporate Nigeria need to know? The first one I have mentioned has to do with the digitalization that is ongoing, one being the issue of national repository. The second is that all our filings and all the businesses that entities need to do with FROC, they are now digitally driven. I know we are all aware that our registration is fully automated. It's done digitally. Now, filing of corporate governance reports. Filing of corporate governance report is also digitally driven. For the NCCG 2018, I know many of the entities here, many of the entities represented here have been doing that through the CG portal for the NCCG 2018 filing. And as we go further in our quest to cover all areas, all sectors in the corporate governance space, we also believe that with what we have on ground, which is scalable, which is flexible, the moment we are able to deal with when we are able to conclude the governance code for the public sector and for the not-for-profit, organizations, they will also be digitally driven in terms of their reportage. So that's one of our key ongoing projects. Another ongoing project, which is more like an intentional move by Financial Reporting Council to, as it were, attend to the gap that we observe in the actuary space. I said we just came up with we have operationalized the Actuarial Valuation Standards Directorate of FROC, but we observe that actuaries are very, very scanty in terms of number. So there is a program that the Financial Reporting Council is championing. We call it Nigerian Actuarial Development Program. NADP, Nigerian Actuarial Development Program, is an intentional move by FROC to increase the availability of actuaries over time. And one of the ways we have pushed ourselves to doing that is to start an advocacy program from the tertiary institutions, the university especially. So in the last couple of months, we've been visiting Nigerian universities that offer actuarial science to let them know that there's a good market, a very wide market, and a very, as it were, beneficial market that is, where the demand is high, but the supply is very, very low, so that we can at least encourage our young ones who are in the university as undergraduates that, look, this space is available and they can do. So we visited a couple of universities, speak to the business, maybe whatever they call it, business studies, management, whatever faculty, to encourage students out there. And, sometimes we even bring in those from the science, the departments, to speak to them that, look, there is one good profession that is vacant and readily available for those who are interested. So that's a deliberate program which we are using the NADP to push through, to ensure that as much as possible, we have enough actually. But if I tell you the number, and if I tell us the number, it's embarrassing, but they are extremely very low. In fact, let me use the word to make it not too frightening. They are less than 50 in the whole country. We're also driving because we also observe that there is no body, there's no a professional body that is recognized or that is in place as a result of an act. So the Financial Reporting Council is supporting the Nigeria Actuarial Society to push for a charter of that body through the National Assembly. We are, supporting them to ensure that that bit of information, that bit of a charter to give them, proper face, so to speak, is actualized through the National Assembly. That is also an ongoing project. For corporate governance, I think I've mentioned that it's an area we are very keen about. NCCG 2018 is already out there. As of today, we have reached the stage where we have concluded the stakeholder engagement for the Nigerian Non-for-Profit Governance Code and the Nigerian Public Sector Governance Code, two separate documents, which hopefully we expect that before the end of this year, it will be released as codes to attend to public sector and, of course, the not-for-profit organizations. But, of course, we also realize that the NCCG 2018, as it currently stands, cannot be complied with because of the expectation, so to speak, by SMEs. So the Financial Reporting Council has already developed a code jointly with some interested parties. We've come up with a code for the SMEs. So as we speak, we have a corporate governance code for the SME space. It's already an issue, and it's something that FROC is driving to ensure that in terms of advocacy, in terms of awareness, enough awareness is created through that, for that code. And if there's any way that NECA can support that move, of course, you are welcome to actually do that. But there's a code for SME already. I know most of those entities in NECA, they are all big entities, but you can have the smaller ones that you want to push to talk about the SME code. In the area of sustainability, a whole lot of initiatives are ongoing there. We started by, first of all, ensuring that we have a group that prepared us for the final adoption of IFRS S1 and S2. We came up with an adoption readiness working group to drive the sustainability issues. And of course, Nigeria has adopted right from day one. The readiness group, came up with a phased approach where certain entities were encouraged and certain entities actually entered as early adopters. If we can mention their names, MTN, Access Bank, Fidelity Bank, and Seplat, they came up as early adopters of the S1, S2 standards. as part of the next phase, and that was in the 2023 phase. Between 2024 and 2027, according to the roadmap, it's a voluntary adoption phase where entities are encouraged to voluntarily adopt the S1, S2, but by 2028, it becomes mandatory for all PIEs. By 2028, it becomes mandatory for all PIEs. And the Financial Reporting Council has embarked on industry-specific trainings that is ongoing. Industry-specific training that is ongoing. And that, we believe, will maintain the momentum. So I believe those are things that I think we are aware of, or we should be aware of as corporate Nigeria. The only encouragement, the only advice we would give to us is that as much as possible, we also need not just your buy-in, but for us to do as much as possible to familiarize ourselves with the Act and its amendment, our regulations, our guidelines. Whenever there are changes, we believe we will be up to speed with it. We also want to encourage stakeholders here that we should, as much as possible, be compliant with the various regulatory pronouncements of the Financial Reporting Council. One thing we have, thought we must continue to do is to keep engaging. I think when the DG was speaking, he also mentioned that FRC is actually open for engagements, and we are always available for engagement. We also want to encourage us. We know we have been doing that whenever there are training programs that we call out, when we are in such programs, definitely if there are developments between intervals of the programs that we organize, you can be rest assured that Financial Reporting Council will also update us in such training programs that we come up with. Whenever there is a disconnect, let me use the word disconnect, please, we are available for discussions. To stretch the stakeholder engagement, we are available even when it now has to do with entity specific. So please, we are open and we are always ready to attend to the areas of concerns by the various entities. We also want to appeal that as much as possible, knowing that we have a section 41 that speaks to employee matter, that as much as possible, let us endeavor to hire qualified professionals. I use the word that are duly registered or can easily be registered to align with the requirements of the Financial Reporting Council. Okay, so having said that, I would like to just read the conclusion of our Executive Secretary. We at the FROC are committed to enhancing transparency, to strengthen corporate governance and ensure compliance with international financial reporting and sustainability standards. These ongoing reforms, which we have tried to pass across to us, will position Nigeria as a leader in financial regulation, benefiting businesses, investors, and our economy at large. Thank you so much for listening. God bless.
Thank you very much, sir, for that wonderful presentation. Yes, participants are asking whether they can have a document that they can read.
Yes, we will send something.
If you don't mind, you can share the slides that you just presented with us. Thank you very much. So we're going to go quickly into the question and answer segment. Please, if you have any question, please do leave it at the chat box. And yes, I'll be sure to read it for our speaker. Okay, so I have one question in the chat box from Toyosi Taiwo that says, please, what is FRCN doing on the disparity in levy of private entities and the quoted entities? the levy based on the current act charged on private entities is abnormal, as this will continue to increase every year because it's charged on turnover. Did you get the question, sir?
I had a question. Yes, I did.
All right.
Maybe you can take one or two more, and then we just, I had the question, disparity on, in the.
Private entities and the
private-
quoted entities, yes.
Yeah, I had the question, but we can take one or two more.
Okay. Then another says, my question is for new companies that wants to register with the FRC, what are the requirements as this is not clearly stated on the website?
Okay, maybe I can take this too quickly.
Okay,
The last question, talking about new companies that want to register with the Financial Reporting Council. First of all, that presupposes that that company is a PIE. Maybe I can make that assumption. If the company is a public interest entity by the definition I read out to us, of course, which is contained in the Act, registering the company, of course, is done online. Like, of course, as part of our D, most of the things that have to do with external bodies, they are all done online now. So the registration is done online. I dare say if you go to our site and go to the menu and all of that, there will be a guide as to what you do. All you just need to click is you are registering. It will ask you whether you are doing for an individual or you are doing for an entity, and then you just follow through. So it's actually done online. So, but like I said, is that entity a PIE? Of course, we can register anyone that wants to register, but at the end of the day, what drives the registration is the issue of whether you are a public interest entity. And as you are registering, maybe the other thing to say is one other requirement would be that there will be demand on you to perhaps give certain information that will now perhaps make us be able to determine what your payment structure would be over time. But first, you should be a BIE. Then the second question on disparity. The way I would like to answer that, we are dealing with the matter of law here. We have an act, and the act perhaps give us prescription as to how to go about determining the annual dues payable to the Financial Reporting Council. The observation you have made, of course, it's noted, but it is more like a matter, it's something that has to do with a law, which I'm sure Financial Reporting Council will not be, we have been given a law to implement. We are trying to, as much as possible, to just implement it. But the concerns are noted, and I'm sure if there are other persons that have that question to ask, the concerns are really, really noted. But right now, we're just implementing the provisions of the Financial Reporting Council Act as amended. Thank you.
Thank you, sir. So this is more like a suggestion. The person saying, I think the FRC website should contain the comprehensive lists of both the financial and non-financial members.
Oh, okay. It's not a comprehensive list of both the financial
and non-financial members.
That need to be further explained by that individual. When you say the list of financial and non-financial members, the way I will interpret it maybe is this. We have individual registrars.
I'm guessing it's the individuals that this person is referring to.
Yes. Okay, well, I don't know whether NECA is saying we should do name and shame. We'll note it, we'll consider it. But that's almost like a name and shame kind of approach, which we are trying as much as possible to avoid. But if it becomes necessary, we may go that route. But the suggestion is noted. The suggestion is noted.
So a quick question here. What is FRC doing to ensure that the chief human resources of officers in organization sign the financial statements and corporate governance reports, as it also contains employees matters?
Come again, didn't get that question.
What is FRCN doing to ensure that the chief human resource officers in organizations sign the financial statements and corporate governance reports, as it also contains employees matters. Did you get it now, sir?
Got it. Yes, well, that I said you should, say it again just to be very sure I got it. Now, if you go to, I mentioned 3 key sections, Section 7, Section 8, and then of course Section 11. But Section 8, specifically had to do with those who should get registered. Now, Section 8.1, either between E and G, please pardon me if I'm not so specific, talks about professional accountants and other assurance service and other professionals who are engaged in the financial reporting process. Those are the people that are expected to register with the Financial Reporting Council. But let me try as much as possible to break it down. And that drives our registration of individuals. Now, when you go for registration of individuals, we now register people under 4 categories. The first category is registration as a director. And what drives that is a confirmation that such an individual to be registered as a director is actually a director. And so in the past, I go to the past now. In the past, we were asking people to provide a professional body's certification, so to speak. But currently, because that, of course, made a whole lot of people to go round and round. But if you are a director, the easier way to know that you are a director is that you are duly registered with the Corporate Affairs Commission. And so currently, in those days, we'll ask for your CO7. Now, if you do a status report, we get that information because it shows whether you are active or not. And if you are not active, then of course, be rest assured that we are not likely to register you even when your name is there as a director. So that is for the directors category. For the chief finance officer, the additional requirement there is that the person must be a professional accountant in Nigeria. And for now, the 2 bodies that we recognize as professional accountancy bodies in Nigeria is the Institute of Chartered Accountants of Nigeria and the Association of National Accountants of Nigeria. That's the second group. The third category is the assurance service providers. I'm going one after the other. The third category is the assurance service providers, where auditors readily come in there, valuers come in there, those who provide specialized service, maybe the tax practitioners, even company secretaries that issue opinions for things and all of that. That falls into the bucket of assurance service provider. And then the 4th category is the governance people, where perhaps the ready example, of course, all of the professionals that we know about, accountants, lawyers, and they are all governance providers in one way or the other. But when you are talking of maybe those in audit committees who we also now say must register, they are doing governance. So if they want to register and they don't have a professional certificate backup, their appointment as audit committee members, of course, which will be documented and has an extract from minutes and all of that, becomes the evidence to show that they are actually audit committee members. So to that extent, they will be registered under governance. So in terms of coverage, that's how we determine those that are registrable. Of course, for those who provide specialized service, company secretaries, they will be there. So anyone that is certifying any part of the financial statement currently should register with the Financial Reporting Council. I think that would be the summary I would give, if that answers that person's concern.
Thank you very much, sir. Another question here for you, please. Do free zone enterprises fall under the FRC's purview following the amendments to the definition of public interest entities?
I would say my answer to that will be on a case-by-case basis. If you expand the act as it is now, the definition of PIE, some are likely to fall in. Let me put it that way. What we have experienced over time is entities that are in the free zone, they also approach us. Remember, when you say free zone, they are regulated. You remember that the the catch in the PIE said regulated entities. So they may be operating in the free zone, but they're actually regulated. They have a regulatory body. So if you stretch the definition of PIE, I would just say the answer is yes. But some of them have approached us, to make some specific requests, and then we'll consider it on its merits.
So I have a comment in the chat box that I would just like to read to you, sir. So the person says uniform corporate governance template and portal should be developed and used for filing corporate governance report instead of the current multiple templates and portals, the FRC, the SEC, and the sectoral regulators. Also, it is expected that before fine is imposed on a company, such entity should be given the opportunity to respond to the perceived breach, to establish such breach and its impact. And lastly, such invitation to respond to the breach should not be to the hotel or to invited companies, should not be required to pay fees for such a meeting. Virtual meeting could be fixed, which is flexible and less expensive to both parties.
Okay. I think I would just see this as a comment and as a suggestion. There are certain aspects that perhaps would require answer, but the rest would just be like suggestion. When you said multiple reporting, so to speak, remember that the base for corporate governance still remains do I use the word prescription, which is now in this case NCCG 2018 of Financial Reporting Council. And that is why when the NCCG 2018 was to come into existence, of course, remember too that we are acting still on the basis of the law. We recognize the fact that there were other codes in existence. And so everyone, were brought into the technical committee that came up with the NCCG 2018. So let's have that understanding that it's not as if it was an imposition. Everybody, CBN, SEC, CAC, they were all well represented, and other stakeholders, especially those who had existing codes as at that time. They were all brought into a working group. Of course, the academia and all others, the big four, other persons were brought in to come before we came up with the NCCG 2018. That is the harmonized version, and I dare say that is the code of corporate governance for Nigeria. But because we have regulatory entity, bodies who, of course, they also demand certain, what I would call stricter measures, stricter requirements from their regulatees or their regulated entities. Of course, we had that agreement, and that is why those codes were now converted, permit me to use that word, to guidelines. And so SEC, CBN, and all of that, that is what they are doing. We have a handshake, we have the understanding as to who does what. So it is not like if you are doing NCCG 2018, you're actually doing what I would call the baseline. So we are not, it's not a matter of superiority. They are all working hand in hand. I don't expect someone who is in the banking, whatever, not to do the banking, because there are specific, which we have also absorbed. Everything that the sectorial regulators have put out there, FRC has taken it in as part of its own document. That's the understanding that we have. So let's see that as something that we will now, over time, work on how not to make it too tedious. I think that's why I said we're taking the advice and we'll see what we can do. For the other things that we have mentioned, they are just noted, and we'll see what can also be done on them. Thank you.
Okay, please confirm if the body does not accept ACCA as a professional body in Nigeria.
The confirmation is not that we don't accept ACCA. So I will also put it right. There are those who have ACCA that are employees in any establishment, and they are doing their work based on that understanding. But such an ACCA holder, in the understanding of the act and in the operations that we have done so far, cannot sit as the CFO of, let me just use the word, the PIE. Why? Because for that person to certify the financial statement as the chief finance officer or head of the finance function, he or she is expected to indicate their FROC number. And for you to obtain your FROC number, that person would have, permit me to use this word, yeah, maybe it's not derogatory in any manner, localized it, I mean, at that particular certification. So the Institute of Chartered Accountants of Nigeria and the Association of National Accountants of Nigeria, they have such arrangement to align the international, so that's the professional certificate from other jurisdictions to our own environment. It's an ongoing process. So once that is done, then of course the person can be recognized by FROC in the context of certification. Otherwise, we can't stop any entity from engaging a CCA holder in their finance function, but we cannot play the role that has put it out. Yes.
All right. Okay. Only statutory audit committee certifies the financial statements. Since private PIEs don't have this, are they spared of the FRC registration requirements?
The question is not so clear, but let me also try to answer it the way perhaps that can. You know, we know that some entities have board audit committees and then statutory audit committee. For those who have, say, just statutory audit committee, we expect that our Rule 10 that has to do with our Rule 10, in addition to the requirement of the audit regulation, currently now, all members of the audit committee are expected to be registered with the Financial Reporting Council. So let's take that for the statutory audit committee. And by the way, for those who are saying, I mean, if we say statutory audit committee, then we are looking at public companies. I mean, that's public limited companies, essentially, which is a provision of CAMA. The provision of CAMA recognizes statutory audit committee, and we are saying everybody should be registered in that manner. But we know that there are entities, especially those that are regulated, that are expected to have board audit committee. So as long as those two are going to have something that will be in the financial statement, certifications will also have to be done. So by extension, the members, because we are treating both the statutory audit committee and the board audit committee as same. They are all attending to audit and risk matters. You know, so in the same token, they are expected to register with the Financial Reporting Council. But if you are not a PIE, it just becomes a matter of somebody, I mean, an entity that just want to do best practice. It will not be a mandatory thing in that case. Permit me to use that word. It will not be mandatory. It will just be, we want to do best practice. But if you are a PIE, then of course, everything applies to you.
Okay.
Whether I've answered that question also.
Okay.
I'm looking at when I see your countenance, I know whether the answer is hitting it as expected.
Okay, so where does a company go for reprieve or get fair hearing in case FRC sanctions them and they feel that they are not being fairly treated? Did you get that?
I got that.
Okay.
Well, maybe the first thing to say is that we believe we treat everybody fairly. Let me also try and explain. Except maybe without trying to defend any position, we are here. We are not to defend ourselves as FROC, but we can also say that in terms of sanctioning, I'm sure anyone that is sanctioned would actually, it can be proved that this is an infraction. Otherwise, we will not go that route. But in terms of fair hearing, we will believe that we do that. But there are provisions in the Act that you can what do you call it? Take advantage of if you believe you are not fairly treated. But we also leave room for appeals. People make appeal documentarily. We've had, sanctions sent out, and the entities right, putting their position across. And I think, except maybe they are not here, many a times they are being granted some bit of concession. That I can always say. We have had several instances where a sanction is either, very, very much reduced or whatever. So it's always, there's always room for that kind of interaction.
Okay, sir. Fine. Okay, do you have a final question? Okay, somebody is asking, is it not amounting to multiple taxation if businesses are to pay 0.5% of turnover as levy, having paying VAT at 7%? I don't know if you understand.
I understand. We are not charging tax now. FRC has nothing to do with tax. Please, FRC has nothing to do with tax. It's annual dues we are collecting. It has nothing to do with tax at all. So maybe that would be we don't charge tax. We are not the tax office. We are not Federal Revenue Service.
Okay. Okay, I think you've answered this, but another person is asking, is it mandatory for PIAs to have a board audit committee?
No, it's not mandatory.
Okay. Then who is supposed to certify the ICFR?
Who is supposed to certify the ICFR?
Yes.
Okay, well, maybe I should kind of rephrase the question. The ICFRO is supposed to be something that management would have done. Now, management, does the assessment for itself, and then an auditor is expected to now look through what management has done and issue an attestation. That would be the way I would answer it. So if that answers that person's, the management cannot be the one, how do I call it, attesting to what it did. So the management carries out its assessment. Yes, in reporting, we expect to see a commitment by the chief executive. We expect to see a commitment by the chief finance officer, but the attestation is actually done by the auditors.
Good morning. What is the position of health maintenance organizations on registration with the FRC? Health maintenance organization. Health, HMOs.
HMOs.
Yes.
They are PIEs now.
Okay.
They are PIEs. They are public interest entities. So, that's why I say once the defining line is, am I a PIE or not? If you are not a PIE, it's not mandatory, at least for now. And even in the act talks about public interest entity repeatedly. So if you are not a public interest entity, then it's not mandatory. You can just do things on good practice, not necessarily because you are compelled to do it by statute.
If somebody is asking if the FRC can recommend trainings, can the FRC recommend trainings to, maybe the person is asking for capacity building purposes?
I said we also do, we come up with trainings once in a while, of course, that most of the time will be free or next to free. For such ones, we will always push it around to ensure that we have enough people attending. But and most of them will post on our website so that people can attend. But if it is in terms of specific training needs and all that, I'm sure between your HRO and probably if it is something that is related to accounting, the auditors should be able to guide on such specialized training. But we do as looking at what perhaps we believe satisfies the bigger audience.
Thank you. Thank you very much, Mr. Osawe, for your time. So I'll be handing over back to the DG for his closing remarks. Thank you.
Thank you so much.
DG. Just give me a minute. Let me try to reach you. Thank you.
I don't know whether he's the one that put something on this thing, said unmute me, please. So I just read that. I don't know whether it's the DG.
Okay, let me confirm that. Thank you.
All right. Thank you very much. And thank you, sir, for that very important conversation that you've had with us. To show the interest in this conversation, we have currently about 171 participants, and at the point it was getting close to 200, and then people had to leave at the point. We want to thank you for this engagement. As you rightly agree, it's an engagement that will continue. It's not ending now, especially because of the other issues that members have raised, challenges members have raised, issues that members have raised, and we also appreciate the commitment, your commitment on behalf of the chairman, and the commitment of the executive secretary himself to continuously engage and resolve these issues. We'll keep coming back to you on these issues because for us, enterprise sustainability is the foundation of everything we will talk about when it comes to national development. If the enterprises is not sustainable, if businesses are not alive, then we won't talk about any levy. We won't talk about government generated tax. We won't talk about employment generation. In fact, the chaos that we'll face will be quite unprecedented. So I want to thank you once again for this engagement. We'll be reaching out to you with some other questions that we couldn't take now, other clarifications that we'll be seeking after now. And lastly, we also want to extend our appreciation to the ES for this opportunity to engage, and that the pending issue that we have, is still on the plate. It's still burning like wildfire, and we need his support. We need his big heart for us to address these issues and address it definitively. We successfully addressed the 4% FOB with custom. The Minister of Finance also intervened in so many issues. So we see no reason why these current issues that is on the burner cannot be resolved and resolved quickly on behalf of organized businesses, since we are all stakeholders in the context of national growth. So thank you to all colleagues of close to 200 member companies that joined this call. Thank you to Tomi for coordinating effectively, and thank you to colleagues at the back end who also facilitated this wonderful session. Once again, thank you, and we do hope you all enjoy a very fruitful day. Thank you.
Thank you, DG. Thank you, everyone. Thank you
Thank
for
you, everyone.
joining.
Yeah. Bye.
Thank you.
Thank you.